Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. On today's show, we're going to step back a little bit because it's a new month. It's November 1st. We got 2 months left in the year, and we're going to step back a little bit, take a bigger picture view in addition to the shorter term stuff we do every week, just to get some perspective as we move into this period where both Barry and my feeling is that we're going to see some unprecedented volatility, lots of opportunity, and lots of pitfalls. And we want to be prepared. We want to prepare you all for it. So that's going to be the theme of today's show. For those of you who are new to the show, my name's Ben Maldonado, and as always, I'm here with my partner Barry Hederachi. Barry, how we doing?
Doing good, doing good.
We have 2 months left in 2024, and they are not going to be boring. I think that's the surest bet on the board right now.
My money's on that for sure.
So, you and I have been talking about this, how we wanted to kind of have a bigger picture focus, especially looking at what cycle wise could be coming in the next couple of months. So we'll do
Hmm.
our regular review with a sort of a more bend towards looking at bigger picture. So
Hmm.
let's jump in right here. Looks like you got there we are battling at the 270.
Yep. And a couple of things, you guys, if you haven't caught the earlier shows, I would say to watch the last couple or three or as much as you can, because that'll help you catch up with the story and how we cover these things. And if you're new, we try to cover all the levels and timing point cycles that we see coming up, usually well ahead of it, maybe even a month ahead of it sometimes.
Mm.
And it would be best to just all you have to do is just make some notes so you can combine it with your systems or whatever, however you trade. And I'm sure it'll be of use. Anyway, so the reason I said to go back and listen is we were talking about this Rebel Yell cycle, which Ben, well, he found, and we were working with it for a while. He mentioned how it's coming up in October. What was it, a couple of weeks ago, right, Ben?
Yeah, the 19th.
19. There you go. And we talked about how, it's an important cycle. We could have some unexpected changes and changes in directions, often followed post cycle.
Hmm.
And then we even spent some time talking about, what does that changing character look like.
Hmm.
And anyway, those are all in the last few episodes. So I don't have to get into that. So let's look at the next couple of months. And I was telling Ben that, forget the couple of months. I'd like to just cover November, get November straight. That would be great. It'll be fun to do. So before we get into November, let's take a look at what's important is along with this Rebel Yell cycle, there were a bunch of other cycles that lined up with with the high that came in. It was not a clean like a peak high, but we have a cluster here.
Hmm.
And the big thing that I noticed, and that's why I pulled up this cash chart first, coming up from October 2022 lows, we're out 540 trading days in 270 degrees. So it's 270 by 540.
Good square.
And that's a square. And
Hmm.
it looks like, well, hey, it's a little above, shouldn't it be right there exactly at the cross? Yes, it should. But what happens is over time, you can have shifts, especially these days, unlike in Gann times. There's a lot of other elements in there working other than just purely just buyers and sellers, a lot of hedging,
Hmm.
all kinds of other business going on. So I think a little bit of here and there movement is okay. And my rule of thumb is long as it's below or right about the eighth of the next square, it's still
Hmm.
okay. We can give it like sort of a little bit of leeway. And we're right in that space here. So the square would be valid, just to clear that up for students.
Hmm.
Anyway, so what happened was no matter where it was, it got below 270 in the last couple of days. And today we're ending with looks like we still have about another 20 minutes to go. It looks like we're going to end up with the inside bar, which, as you guys know, sets us up for next week in an interesting way because we always watch to see if the higher low gets taken out, and that normally dictates a little bit of a directionality.
Hmm.
So that's what's in the card. So what kind of cycles were there other than the 540? So purely looking at cycles, there's a 45 from this low to this high. So that's a big deal in Gann terms, especially when you are coming into a finish of a cycle, finish of a leg. So
Hmm.
what we're looking at would be, here's a bigger cycle. I mean, the biggest one meaning one from 22, and then we have the smallest one, which is 45 days. So it all sort of links up. And also from the April low, we're 180. And from the October low of 23, we're 360. Obviously, we're right there.
I mean, those are all really good.
Yeah, they're all good cycles. So they're all lined up. So I think it's important to notice that. So what does all that mean? That means this entire leg could have expired, and we're setting up another leg, another direction.
Hmm.
So I mean, that's the first thing to keep in mind. Okay, let's take a look at this weekly chart now. I'm breaking a little bit from the normal way we look at it, just because we want to talk about all the look at it from a couple of different angles because and techniques, just because next week's so important, and it's
Hmm.
not even because of FOMC
Or the election.
or the election. It's
It
really
just happens that both of those things are this next week. That's
yeah.
crazy.
I mean, especially considering it's every 4 years, but just so everything just lined up exactly going into that. Now, this chart you guys have been seeing, we've been talking about this 144 by 108 weeks. It's a good cycle to watch, and if you catch it, very good payoffs. So it's fully worth, because 108 weeks, you could have it's definitely more than a 1 week pullback when
Hmm.
it's catching traction. So we've been talking a little bit about this last couple of weeks because we're heading up into it. And I talked about how this 59.50 on the cash would be, that would be like the perfect spot, ideal sweet spot to hit. And if it goes a little more, then we have a little bit of a buffer above that. We also have the geometry line. And as you can see, we didn't quite get to that. We basically stalled out at 58.10. You can say it's 57.34 now. We really, this is where we talk about, get above and hold above, right? I mean, as you
Hmm.
guys know. So we wanted to see if we can hold above 144, which would sort of tip the hat towards, yeah, we're going to go a little bit higher, but we didn't, we're pulling back. So now we want to watch at least basis the weekly. So this is where you'd have to make your notes, 58.10, 58.15. We want to see if price would stay below that level and fail on rallies into that level, or would it hold above it? So this is the first thing. It's not about anything else other than to know which side is it weighing in. If the bears are weighing in, sure enough, it's not going to be able to close above that. And that's how we use the squares.
It's
And
also trying to escape the circle.
exactly. You brought that up earlier today. Like, hey,
Yeah.
we got the first bar outside of the circle. Sure, we did. Normally, I give it a 1 or 2 bars because circles aren't all that accurate. But this one, actually, I checked and it's pretty tight. So I would
Hmm.
say we did fall outside. And normal thing that happens when a circle goes, it's often it will just drop. And the other thing is we'll break out down one and then maybe up 1 or 2, kind of like breaking a trend line and coming from below, like kiss below,
Yep.
and then drop.
Hmm.
That's another pattern. So let's watch it. Um, but I'm giving you guys these numbers 58.10, 58.15. If we are hanging below that for long, it's um, more bearish than bullish. How about that?
Mm. Yep. Yep.
And why is all of that? Well, because the price and time squared here. So that's why. And this is on a weekly basis, 108 weeks. And you guys, I just showed you guys how the shorter time frames were looking. The 45s, 180s. I mean, these are all lined up and looking pretty cute. So it all looks pretty good.
Yes, it does.
Here's the well, now we're back to the ES, the D's contract.
Hmm.
And we kind of showcased this last couple of weeks, even on the midweek drop. We were looking for a lower high, and we were also looking to see if we can settle above this 58.92 or not. That's how we can. Timing might not come in exactly, but price is. We talked about this a while back in one of the episodes. How price, we can actually measure is real. It's we don't set price back at fall and forward. We don't mess with the time. You
Right.
know what I mean? Like time you can mess around with. They have different calendars, different ways.
Yeah, it's true.
You
That
can
is
pick
true.
bars,
Trading days, calendar days, solar degrees.
all kinds of bars. But price is price. So looking at price, and we tend to weigh more towards that. 58.92 was the level we've been talking about last few weeks, almost a month, because we wanted to see if it will get above this or not. If it failed, obviously we talked about how we want to catch that lower high, which was right there.
Mhm.
And this is Ben's favorite fat pitch, right? That
That's
comes in.
exactly right.
Versus if we got above it, then we talked about how what that would mean is that there's a larger cycle working, and we could go higher into that. And still, it might mean we might go up into the 90 and do something at the 90, which is early December. But anyway, we have to deal with the cycles that expired here, and we have a decent count of that. We have 72 degrees from the low in August. Um,
Mhm.
and this is the 45 I showed you guys earlier. So, okay, so all of this to say what? Well, all of this to say there's a bunch of cycles that expired at this high, and you can see a lot of them had an effect on it. That's why we just didn't spike and turn. It kind of waited till all the cycles expired. That's one way to interpret it. There are other ways. And we got the lower high. That's the main thing. And when do we confirm that? Well, we can confirm it well, it's kind of like a normal ABCD, right? When the low of the 23rd got taken out, that really confirms this lower high. I mean, that's a mechanical way to do it. Of course, we had this outside sort of reversal that happened also.
And that's a good poster child for getting stuck under a level because
Oh
look how
man,
it
yeah,
just gets stuck under that 90.
it was yeah, it's very good. And I drew this line in I think last week and saying, look, we have some good floor here, the old highs, and how
Hmm.
they turn support, and to see if we hold above that. I mean, that would be another sign to say, well, we're going to probably do ascending triangle, maybe break to the upside,
Hmm.
right? As a plan B. But you can see all of that really didn't mean much. We sliced right through it, right towards the lower end of that consolidation, which puts us smack on top of these things, which is the August highs that we put in. But that's
Hmm.
really about it. Between that and everything else, there isn't a whole lot of other levels on this side of the page. Okay, so that's sort of an overview of what's happening with the S&P. And what I wanted to add was if you guys didn't catch the show from midweek show from this week, we looked at a bunch of tech stocks and on a weekly basis to see what's happening. Are these things going higher, lower? What's the temperature? And what we found was few of them had highs already coming in July. We just couldn't put any newer highs, so they are sitting there with lower highs, and the other ones are very close to resistance levels derived through the squares. And so they were kind of in the topish, either it topped off or it's very close to it, exhausted kind of levels. And
Hmm.
I thought, I mean, they're all in the NASDAQ, which Ben covers, but it's interesting. We're kind of catching some of that in the ES, right? Far as the cycles go. I mean, they're all kind
Sure.
of lining up in that certain way. So this is the 144 by 108 that we looked at on the other chart, which is a longer term chart, which is circle. And normally I have the 90-degree square here. And you can see what happened was, sure enough, we got above the 56.72 back in the day. Then we ran up into this green dotted line. You only get two of those in a square. And that's the two-thirds line. And you can
Hmm.
see that a little bit clearly if we get to the 60-degree
Hmm.
square. You can see that dashed line is two-thirds. And that's where we stalled out for, where the sort of the high came in. And it's a big deal. Again, now we have to go back to the 56.72 as support. So we have to see, it's only been a couple of days how we handle 56.72. And I'll tell you, even after, let's say we poke this and go up for a 1 or 2 day counter trend, that's what you really want to watch, how we come in off of that. Right, Ben?
Absolutely.
That's the ticket there.
Hmm. That becomes the fat pitch setup potentially.
Yep. So 56.72, we'll watch that and see. I mean, it's possible. The reason I mention is it's possible that we get some kind of a reaction off of that
Hmm.
for a 1 or 2 day, some kind of a pullback. So we'll see how that works out. Not 1 or 2 day, 1 or 2 bar pullback
Hmm.
is what we're looking at. And if that comes in correctly, then that means we have a third. If this is a 1, 2, third leg could be a big one.
Yep.
So we're just setting the layout groundwork just to see what we can expect. We want to look at all the sides. Obviously, we've been talking about a lower high on the dailies and like the chart that I opened up with. Keeping those things in mind, we know if it's going higher, we'll figure that out early enough. But right now, there's too much risk in buying at this level. Kind of goes without saying, right, Ben?
That's exactly right.
All right, so let's look at that's for the weekly. I don't have anything else to add. Ben, I know you're going to cover all the monthlies today, so I'm not going to.
Yep. Yeah, no worries.
All right, let's take a look at our 30-minute before we leave the ES. We left off last Friday with, I'm pretty sure it was 58.86, right?
Yep.
58.86 or 58.58. Both levels were important early in the week. What happened? Oh, so we were talking about 58.86 being a key level to watch, and it's going to build up resistance going into 59.02, and to see if we can, get above, sort of hold above 58.86. And long as we were above 58.58, it's a little bit primed, we can go up and test these levels. And what ended up happening was, we couldn't really get on top of it. You can see how we really stalled out at 30th, 29th, 30th. We were just right below the 58.86. And eventually, the last test of the 58.58 sort of gave out, and we slid into 58.14, which is a support level. And you can see how, we tried to hold up, couldn't. And the next level we really had was 57.40, and we came down and we stalled here, ran up today to 58.14 up in that area, failed. And so hopefully, I mean, these levels will hold, but 57.20 is a big deal at least on the 30-minute. It's a kind of a big deal on some of the other charts. So the key for next week is to see if we take this out or not. If 57.20 gets taken out, other than a sort of a spike, like we did here first at 58.14, the first time we, went down there, spiked and reversed, unless it's that kind of a spike and reverse, getting stuck below this 57.40, 57.20, this getting stuck below this zone is bearish. I don't want to mix any words. so,
Right. Right.
I mean, it's bearish now. I mean, sure, it's support here, but we're stuck, we're pinned between these levels probably because of gamma. But anyway, 58.14 up here. You can see, we talked about how it's weak below 58.14 until we get to the support. And then, we can bounce. So just like we were bouncing back and forth between the 50% level and the square, the dash line and the red line. You see how we did that forever? Like you could easily get stuck between these two levels. The difference is now is the Rebel Yell cycle and all these other cycle looks to be expired.
Hmm.
So now getting stuck below this level has a different kind of a meaning 57.20 is actually at risk
Yeah.
if the trend is down, right? If the trend is
Yep.
up, sure, these can stair step and use, stair step to the upside like we did before the 19th of October.
Hmm.
But when it flips to the other side, then the stair steps, these become like ceilings. You go up, test, fail, come down, get stuck under. And we have good examples: stuck under, stuck
Yep.
under,
Yep.
stuck under here. So watch 57.20 to 57.40 zone. If we get under that, obviously, 56.30 area is next. And honestly, if you get to 56.30, 5600 is not too far out to get. All right. So that's all within reach.
Hey, the one thing I want to point out on this chart, and you said it, remember when we were testing 5902? And I think it was last week you said it, like on the 25th, you said, notice that we couldn't even get there.
Mm-hmm.
And it's that, that level of detail and that, understanding where, before when we tested it on the 22nd, we even pushed above a little bit.
Right here.
And
Yeah.
then, yeah, and then the next test, we couldn't even get to it. And you said that shows weakness. And then you can see what happened.
And then we go lower. lower, lower,
Yeah,
and
yeah. But I
slide.
mean, it's that, it's that attention to detail that you can get when you watch the price action that closely. You can get these kind of clues.
Yeah.
And if you don't believe me, go back and listen to the show because I vividly remember you saying that. And it seemed, for somebody who's not understanding of how important that is, that level, and watching the price action around it, you wouldn't pick up on that. But that was the first clue for you
Hmm.
as you were reviewing it. And it was very astute.
And you can see how that changed after the Rebel Yell hit in. Here we quite a bit
Absolutely.
above, quite a bit above the 5902 level.
Right.
Then it's lower, 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 lower yet,
Yeah.
and then a false break to top it all off, and then drop.
Yeah.
That's
That's right.
textbook. This is all the things we talk about in 1 2 weeks
But
of
that's how
price
you
action.
detect the change of character, right? That little nuance is a change in character, and that gives you a clue as to what's coming.
Absolutely. And this is why you don't want to get too lost in indicators, because then get seduced by them with the colors and the way they move and
Right. No, it's true.
and you miss the raw data, which is really where you see the patterns emerge. And then, well, we talk about this every day. You post every day, I post every day on X. And if you guys watch that, you would have caught, you would have caught the movement moving lower and lower, and how the 5858 was becoming more prominent, right? We started
Hmm.
crossing it more and more.
Yep.
Eventually dropped. Anyway, enough for that. What else we have? Well, NASDAQ, I don't talk about too much, but I do post. Ben does too.
That 20,000 level is key, isn't it?
Yeah, I mean, NASDAQ, really, really did well. I mean, look,
Hmm.
we had this area. This is all on X. I post them every day. This sort of a buffer to catch this. We went up there, reversed, and man, never to look back. Right? It
Nope.
just went, went full half square travel. So if you guys are just learning about squares, I mean, this is a great example of how, once the 50% of a level lets go, how it really naturally just goes, gets pulled into the next level.
Hmm.
Not always that exact, but this is good enough.
Absolutely.
All right, so that's the wrap for the ES and all the indices that I look at.
Okay.
Do you have anything to add to any of that? Or we're
No, I
good.
think it's great.
Yeah.
Really good stuff. Let's look at bonds because bonds are very active.
Man, another market that we've been right on, right? On
Yep.
tail of.
Yep.
Oh, we didn't look at this chart, but just to say, I mean, this is pretty much the same deal. We're up 90. Don't have to say anymore other than
And failing.
and failing, and 58 48 was a level that we were, on the cash chart that we were watching to see if we can get above or not. As you can see here, 3 days in a row, all kinds of price action, just couldn't do it. And eventually we gapped down, and with the inside day today. So that really opens it up. I'm telling you, man, nothing like when it finally lets go and then you gap and you get an inside day afterwards.
Hmm.
So I'm telling you, Monday is going to be fun. One way, the other. I mean, the whole next week is going to be ridiculous. So
Yeah. Yeah.
let's see. But if you know the levels, you wait for the right setups, everything's okay. One other
Yep.
level I want to talk about before we go is this 5673. We might have came up on another one.
Hmm.
But look at this. This is really where we tested on the way up. It's the resistance here, more or
Hmm.
less resistance here, and it was the high that we tapped right before we started all this.
Yeah. In July, right?
Yeah, right there. Oh yeah, July high right there.
Yeah. Yeah.
The tech stocks kind of topped out.
Hmm.
So that level 5673 is really, really important. It's possible that we do some kind of a false break here and expect some kind of if they were going to get a bounce, it'd be cool to have it here, do a false break and then run up and then roll over if we're
Yep.
going to play that side. But I'm watching this not just for that, but also to see if we hold it, and if it does, if we can get back above 5750. I'm just talking now, just how to sort of put it together, thread it together. You want to watch these two levels to see how price action sort of plays between them. All
Hmm.
right, let's move on to bonds. And
Uh-oh.
always right. And
Because we're going to get stuck below the 45, and that's huge.
absolutely, man. I mean, right here, we got stuck the entire week, right? Just couldn't do it.
Yeah. Yep.
And well, if you're a regular viewer, I'm sure you saw this. We talked about this high come in. I remember talking about this 180, the
Hmm.
315, the 135. kind of like how I did the count, at the open, we looked at the S&P, right? It's the
Yep.
same. This is how these counts come in. So when they come in, you got to pay attention. So we were watching that to see if the trend line breaks. And I told, we talked about how 124 would be the key level to watch. If we can't hold above that, we're going to lose it. And we tried sort of even trying to fake it. Couldn't quite do it, did the false break, and then that was it.
I know, but Barry, look at that from 124 to that.
Mhm.
Right now, we're at 116.20, call it,
Yeah,
and no stress.
no stress,
Boom,
man.
boom, 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 boom.
Yeah, easy
Down
trade.
6 days in a row.
Yeah, and if you listen to the news, I mean, oh my God, I don't know how you trade if you listen to anybody other than the price.
And I have to tell you a funny story. A buddy of mine is an orthopedic surgeon. He's my college roommate, orthopedic surgeon out in Colorado. And he was
Mhm.
like, oh, the Fed cut rates and rates are going down. I should lock this in. I gotta, I'm buying this thing. I want to lock my rates in for, because the rates are gonna go down and I won't get the return. This is an investment
Mhm.
he was gonna make. And I said, man, just because the Fed cut rates doesn't mean rates are going down. The exact opposite has happened. But
Mhm.
that's the psychology because on the news that's all they see. Well, interest rates got cut by a 0.5%, so rates are going down. And
Yeah.
and he's a smart guy. He's an orthopedic surgeon, but he could not have been more wrong about what was actually happening to interest rates.
Mhm. Well, I think, surgeons and trading doesn't exactly go along really well. From No, but really, I've known it's just one of those things, right?
Yeah, yeah.
Just like accountants
Right,
and attorneys in trading. I've heard horror stories.
right, right.
But they're smart people. I guess it's just where you get the data, right? If you get
Yeah.
the information from TVs and looking at the fundamental side alone,
They're going to misdirect you.
yeah, they're going to get misdirected because it's
Yep,
already old news and the big money's already done what it has to do.
that's right.
Anyway, getting back to this, so what happens from here? Well, I've been, I've been so bearish on the bonds, and I continue to be now, especially now that we took out this key level, which was 45 up. We looked at the 72. I don't want to change the squares right now, but anyway, we got this high. We were looking for it to go lower, and we're about done 45 degrees right about in here. So I'm expecting a little bit of support, and I'll show you why I say that. Let me move it really quick.
Hmm.
So,
Yeah.
so we'll be coming down to 45, and we know this is great because you can see how it got stuck below 50% of the square here. So the next big battle is really at that. If it
Hmm.
slips through, so what is it? Let's say 116, right?
Yep. And then if it
116.
slips through there, then we're going to the April lows.
If we slip through that, yes, I think we're going to April lows, and dare I say, no, maybe October lows.
Right, right. No, I know you said that.
No
You said
joke,
we're,
man. I mean, these things,
yeah,
all these things happen that we
yeah.
people just don't imagine. But we're just following it. We're taking square at a time, level at a time. We're not, we don't put one trade and hold it forever. So anyway, 116.07 is really the 07.05, 116.05 is the level. And we'll see. I'm expecting it to sort of hold here. And maybe this is where the Fed comes in. Something will happen at the 45 line. Makes sense.
Hmm.
We've been bearish. Now we're kind of pulling back a little bit to see what happens at the 45. If we hold above, maybe rally up to 119 and a half or so, and check back before we go lower. You can see bonds have a habit of checking back often. So it's possible we do that here. But I'll tell you what, though, if we slip through 45 degree line, which is, if we slip through 116, and, we could have, I think we can go a lot lower. Just like you said, at least check the April lows. So that's
Hmm.
quite a bit of a move, right? I mean, and,
For
and very
sure.
fast.
Yep.
So keep that in mind. Let's take a quick look at bonds, the weekly. And well, sure enough, I have 114 marked here. This was a
There you
target
go.
for, a while back. So 144 down from the high. This is the area we were watching. I think we talked about it a few times. Broke the trend line. If we're going to stall out here, it's really 116, 114, 116. So we'll watch the daily to see what happens. I mean, it'll bounce up here to test the 144 wouldn't be a bad idea. So for now, we're kind of pausing a little bit, letting price get to the 116. We're just 20 clicks away, and see how we behave there. and we'll have an update on that. Obviously, next Friday is going to be a riot, so let's
Yep.
save some of that for next Friday.
Okay.
Fair enough, right?
Yep.
All right. So crude pretty much consolidating within, around our level. Low came in over here in early September, right at the 60-degree point mark. And we've talked about all of this and the rally and we didn't quite hold the trend line, but we're holding the lows.
Hmm.
I'd say fairly well,
Yeah.
but we're not in a big trending mode now. We're so it looks like we're going to consolidate in here and till it's time to move.
As someone once said, Barry, violently sideways.
Yeah, we're just and hopefully it looks like we're just starting it. So we'll see. We'll
Yeah.
see how the consolidation goes. But you can see, I mean, the good news is, the 60 that tap over here held and we're
Yep.
sort of hovering above it and let's see what happens next. But for
Yep.
now, yeah, it's sort of consolidation. Unless we get down to the line again, we can look to trade the long side off of that when that
Hmm.
holds. All right, let's take a look at the weekly, which is a really interesting chart. We want to talk about violently sideways, you know.
Yes.
So look, we're actually maybe it's time to take the our trusty box out of it. So we can see the triangle. We broke to the downside, went back up to retest, and normally we can't really hold and get through. We're going to sell off, and we didn't quite do that. So we're kind of holding it. So it looks like the triangle might have emerged as a pattern, but because it emerged in the middle of the sideways, we're just going to continue ignore that and consolidate up in here, and we'll wait for the next move.
Hmm.
Yeah, not much.
Not
We
much
had
else
plenty
to
of
add.
yeah, had plenty of chances to run, so we'll wait for it to start moving when he's ready. Move it on to gold. Wait till you see the weekly chart today.
Hmm.
Anyway, we're going off the October low. 216, this level was important. And you could, remember if you guys watch it, we watch it for a while and it corrected to quarter of the square, traded higher, got above the 216, and now it's doing pretty well
Yeah.
and having a sort of a little bit of a correction. We did get to the 1/3 of the square of the 216. All that is important, but the key thing to watch here would be this 29, 26.95,
Hmm.
26.95, 26.96 level. And I'll tell you why. Let's move over to the weekly chart really quick. And here, the low is coming off of the 22 low
Hmm.
in gold. And we drew up this little box a few weeks back, 27.97 being sort of the upper reach max. I can't remember if we did that online or not, but anyway, look at that, Ben. Tapped it
Perfect. Perfect.
perfectly, reversed, and that box was sort of the what we thought to be resistance for this leg, and we're up 144, bit through just enough. Now, clearly, this is a pause in gold, at least in my perspective, till we can actually get above this and hold above this, which is 27.69. I would say 69, yeah, or 27.77, 71.
Yeah. I agree on the pause because I had on the daily, I got a 120 by 90 square
Okay, yeah.
at the high.
Yeah, and this I remember this 27.97. I got it from a way back when level, and that being a target. And you can see when the gold hits targets that perfectly, you really want to, especially with the reaction like it did,
Yeah. Pay
you
attention.
want to watch a little bit. Yeah, gold's on pause for now, but we want to watch that level on the daily chart. Hold on 1 second. And the reason I want to watch this 26.96 is if we can manage to somehow correct and hold above it, consolidate above, it's still bullish, and we might still have another run or maybe go up and make a false
Hmm.
break or go higher. So
Hmm.
it's still in the books. So we're waiting to see how gold basically consolidates, and the trend line is still in there. We'll leave it at that for now. Speaking of consolidating, man, look, copper is right on top of that quarter square and just marching perfectly sideways.
Winding, winding, winding.
Mhm. And that level is 430. So, after we came down and we held here, we talked about all the support we're holding above it. So it seems like long as we're holding above it, a break to the upside would be the normal thing. But I'll tell you what, though, if you break to the downside again at this time, meaning November,
Hmm.
uh, I don't think it's going to bode good for a lot of other sectors. so
No, no,
so we'll watch that carefully because this is the early. This is kind of a type of a canary also. So that's so yeah, 430 for copper above or below is really the thing we're watching. And long as we're above that, everything's okay. It just might get a little worrisome if we get get below by much, and especially if we get stuck below that.
hmm
And looking at the weekly, you can see we can afford to go. That triangle is what kind of bothers me because normally when they break to the downside is pretty negative, right? So
hmm
let's see how that works out. But anyway, 423, which is a little bit below the level we looked at daily, is the level to watch on the weekly level. That's 423. As long as we're above that, okay, the long term sort of the trend is intact. And not only because of that, but you can see how all the higher lows here. So we're coming into a sort of a moment of truth.
Agreed.
Yeah, let's see how copper makes out. But now, not much to do there for copper.
It's winding up.
Yep. Let's move on to the dollar. Not done yet.
Nope.
Dollar's fairly easy if you guys watch it every week. We talked about all of these things that happen. We were looking for support to hold around this 100 area, which it did, and for the rally. And now looks like we're going to go up and test the upper end, and we'll wait to do that. The 50% was like the big test. And you can see we actually went up to the 2/3 before we even paused a little bit, which
Hmm.
to me just shows it's very strong. So it's probably going to, especially with the outside reversal off of that little consolidation, it just looks very strong. And so 104 is the level of the 2/3 of the square. Actually, I should say 1/3 from the high. So it's a 1/3 of the square. Yeah, we're bullish and we're staying that way.
Hmm.
Anything you want to add to that, Ben?
No, I think you got the levels.
We're good, right? Looking at the weekly, which is really, yeah, it's been sideways, but a fantastic chart because the way how everything held and then, 90-week cycle and all of that.
Hmm.
Here, the 90 degrees held the lows. This is why we were very bullish on it. And now we're up to the 1/3 of the square. So this is sort of the battle line. You can see we've had issues at this level before. So we'll see which side we get on. Either we're going to pause a little. I mean, very strong move up, right?
Hmm.
And it wouldn't be unreasonable to have it correct a little bit. But either way, the 1/3 level is what we're watching. Is over here. It's about one. Well, it's 104.30.
Hmm.
So if we can get above it or not. Again, we had a nice run. So here we want to take a little pause and see if we can, especially based on the daily, if we can get above that and hold above, and that'll clear up the rest of the way. But overall, is it bullish? Yeah. I mean, we can have a consolidate for a month and still be bullish. So we're okay.
Hmm.
Or even a 50% pullback, still perfectly bullish. All right. Euro, our 108 level held, more or less held, a little bit of a battle, and they bought it up. And I talked about how it run up to 109 wouldn't be such a bad idea. And then because we didn't have a decent pullback, right? Coming all the way down into 108,
Right.
this run. And that it'll be good to see a little bit of a correction up into 109 area and then back down. And looks like that's in play. So we'll let that be. 10 the weekly euro looks actually, I was going to say the resolution is much greater. It looks much better. So basically, we're not going to quite get to 90. We're just sort of consolidating here. Um, this would be violently sideways, wouldn't it?
Absolutely.
Because we got a little bit of everything.
Hmm.
And the triangle that you guys see is the triangle we drew in before this breakout back in August. And we did that, couldn't quite get above even to make a false break. We're back at 108. So this is going to continue to be sort of the mean reversion or the key level to watch for now till we actually leave the area. So if we're going to do the upside or downside. Now we did break to the upside and do all of that business. We haven't broken the lower trend line. So I'm thinking if we take out the lower trend line, then we're going to have all kinds of interesting things going on in the world. Plus, it'll be a good trade. And because I'm expecting it to go at least 50%, which is at 104.
That looks good.
I mean, all of this stuff looks like it's building up. You know,
There's a big move coming.
each market on its own is in a very,
Yeah.
they're all in interesting levels.
Speaking of triangulating,
Yeah, exactly. Hang Seng, well, it's been fun calling the corners, but now we're basically stuck above this 203.80 area. And well, I'd say long, we got a little triangle going. So either we break, try to test this 19,450 and consolidate and run up, or we're going to hold here and try to make a shot at take a shot at the 50% level, which is 21,518. And that's what I have to say for that. You're going to cover natural gas, the monthly,
just the
right?
monthly, the
Okay.
monthlies on
Right.
everything.
So natural gas is pretty much doing the same thing. We're making lower highs, so we'll see how it holds up. The entire process to me looks like a little bit stretched out um, bottoming process.
One
So
big bottom.
yep, we'll just stay with that. And yeah, that's all I got. Let me put it back to you, and we'll cover the rest of commodities from the what do we got to the helicopter view.
Yeah, we're gonna have the big picture view.
Yeah, let's do that. And if you guys like our work, please remember to like and share and hit the alerts and subscribe and help grow the channel, which is very cool. Well, we finally got to that square a few times
Yeah. We'll
and the,
start. We're gonna
and the
start with
lower
the
high.
yeah, lower high. That's the key, right? We'll start with the NQ monthlies.
Uh-huh.
The key thing to notice is right, we made our high. We had good counts from multiple spots, 188, 261, 101, 52, 32 high to high. So the high is good. And
I mean,
the
that
high
high
is
squared out from number of places,
absolutely.
obviously. So, mhm.
Yep. We squared out there and we haven't been able to exceed it. Unlike, S&P and Dow that have made new highs, this hasn't been able to make a new high.
Right.
So we had the big down bar after the July high, and then we've had two up bars. And now the key thing to watch is do we take out the low that we just made, which is 19,918, it looks like 1918, 818.
Hmm.
So that's the thing. If we take that out, we reverse the monthly trend and we could conceivably be catching the fast move because we would have that lower high, right? And the pullback would only be 2 bars. The counter trend would only be 2 bars. So that's key, but the setup is there. Now we just have to see how price plays out, which we'll watch it, with the lower time frames. But for the purpose of today, we're just going to stay on the monthlies of all the different markets. Anything to add here?
No, we're good. Yeah.
Okay. Here's an interesting one to look at. Is your
Hmm.
Bitcoin monthly. Remember we were talking about during this frustrating consolidation how it was happening at the previous highs, essentially.
Hmm.
We got the move last month, broke out of the pattern. We're above the half square, 67,419. So the target and the magnet, as long as we're above, is 80,700 and change. From a timing thing, I messed around with a few things just to see if we go from the lows in 2016 to the high we made in 2021, it's 60 months. If we take 60 months off the lows we made in 22, it takes us out into October, November of 2027.
Hmm. And
So
where would
that's
the half cycle come in?
the half cycle would be 30 months, which is somewhere around here.
Okay. Okay.
Next May,
Next way. Okay.
right in there. The other thing just quickly did off this pullback, it was 5 months to make the new high. If we use this as our pullback low, we could conceivably make a new high in January, if we follow that same little cycle. But I mean, it's bullish. As long as we're above this half square, it's bullish.
No question about it. Yep.
So play the long side, you know, against that level.
Do we get to
All
80?
right. That's right. That's right. Let's take a quick look at the ES monthly because I know you wanted that one in there too.
Mhm.
And this one's
Wow.
really interesting to me because we got a really nice square here, right? You've
Yeah.
got 270 in time, 270 months, and you've got what's that, a 45. So you got 315
Hmm.
in price.
Yeah, and that's no joke.
No, that's a big cycle. And then these smaller cycles will come in 33 high to high, 22 on the last run, 54, a 101, a 180. I mean, there's tons of time counts coming in right
Hmm.
there.
Hmm.
So that, and the thing that was interesting is most of the month we were up above this half square, and of course yesterday we pulled right back below it.
Right.
So monthly basis 58.47, 58.50 area is key. Below that, and essentially we're getting stuck under.
Yeah, well, this is, not just getting stuck under this, that 270 is no joke. So I'm
No.
thinking we're coming into a really critical period, come December, January. There's no question.
And that's not 270 days, that's 270 months.
Yeah. It,
Long time.
it's a long time, and those counts really hold a lot of power. So,
Right. So we got to watch that.
and you heard it here first. There you go. You
it's
saw
an
the
important
chart, right?
right.
Look at that,
It's an
270 months by 315. It's
yep.
a very good, great
It's a
score.
really, really nice square.
Hmm.
And the setting point, if anyone wants to know, it's the O2 low.
Hmm.
The O2 low. So the .com low. All right, we're gonna run through these quickly so we can get them all in. 30-year bonds. Interesting when I was looking at these cycles, Barry, the time counts,
Hmm.
a lot of them are highs to high, right? High
Hmm.
to high 45, high to high 90, high to high 135, high to high 450.
Hmm.
But
Months.
the months, yeah, this is months. So this to me, major, major high. And you don't have to be, Sherlock Holmes to figure that out because we broke a 40-year trend line once we turned tail and left.
Hmm.
This is a trend line from the 80 81 low in bonds, and we broke that. We've talked about that on the show many times. We also came out of this beautiful circle, came out of here, and broke that. Looking at where we may be going, I just was trying to measure something. High to low, we did 45, which is nice. And we got this little reaction, this muted ABCD. We couldn't even make it all the way up to the target. So that may be all we're getting there. And if we go 90, it takes us out into September of 2027.
And that
That's a
could be the low. I wouldn't.
it could be a low, right? Because look at
Yeah.
look at how I mean this is we'll have to see what happens, but that would be 90 months from this high.
And if it can come up to the 45 from 81, that would be a hell of a thing right there.
Yeah. Yeah. So we'll see. We'll see. That's bonds. Like I said, we're
Or,
going to
or
go
double
through.
bottom 81.
If you have anything, Barry, if you got anything to add, just jump in so we can flip through and make sure we get through these.
Yeah, sure.
So
Okay.
here's wheat. Now, what's the most interesting thing about wheat here? Well, for me, it's that high to, off this major peak, high to low, we did a 28 here, high to low, we did a 28. So I think this low is pretty good. This is a low to low count of a 90. Here we did low to high of a 90.
Hmm.
The key thing on the wheat chart is that I think we've got like a three drive pattern too. One, two, three,
Hmm.
nice spacing there. But we want to get above this full square.
Yeah.
It's around 593, 594. We could settle above that, then I'm confident that we've kind of turned the corner. And it may be that we made the initial push up, pull back, and now we're going to go to a bigger peak.
Right.
So we'll see. That's wheat. Let's go to corn next. Corn's got some very interesting counts. You can see a pattern here, right? We did this first push, pull back, push into the major high, and we had low to high. We did 90. We had a 36 off the last push into the high. So I
Hmm.
said, what if we said from the low we did 90, takes us into 2028 for a potential high. And if we're talking about the secondary low, the higher low, and we do 36 there, puts us into August of 27. So we got kind of a window of 6 months between, mid to late 2027 to 2028, we could catch the high here. but the
Mhm.
pattern is remarkably similar, right? Look at the way it, pulls, the way it goes up, pulls back, and then launches. So we got to watch it. Key here for us, monthly basis, is getting above the 464 area. Also, low to low was a 180,
Mm.
which is kind of nice. It gives us some decent anchor there on that low. All right, let's jump to soybeans next. Beans are very similar to corn. The you can see the time counts. It likes 45s and 90s, low to high, low to high, low to high. Here we've got a low to high of 90 for the full cycle. So I said, all right, if we take it off of this low and we do a 90, we're into November of 2026
Mm.
for a potential high there. You can see the interesting thing here too is we're sitting on top of this full square, which is really important. So
Yeah.
call it 983. As long as we're above 983, we this looks like just a flush, and now we're going to start moving higher. So that's beans. Let's jump over to the softs now. Here's sugar. Sugar's got a very interesting pattern, right? Low to high was a 90. Secondary higher low was a 45. Here we did low to high 45. If we add another 45 off of this recent low, it puts us into 2028.
Yep.
Key here is where we're battling right now. You can see we're kind of triangulating. Last month we were inside. Today we're inside all of last month's price action. So this 2234 is really important.
Yeah.
Stay on top of that. You're basically sitting on top of, a decade's worth of price action. So that's sugar. Let's go to cotton.
Almost there.
Cotton likes 27s.
Hmm.
Low to high 27, low to high 27, high to low 27, and now we're in a triangle. And you can tell anybody that follows cotton, man, this thing's been painfully sideways. But look what happens after this thing triangulates on a monthly basis when it
Yeah.
goes.
Sure.
So we just watch this triangle, see if we can get a good break, and then it could be up and out, off of this higher low from the low over here. But until it does, it gives us nothing to do.
Hmm.
Got to break that. Cocoa. I was trying to find the 90s on this thing. It really likes 84s. I mean, this move low to high was 84 here, low to high 84. But you look at the perfect square we got on this.
Yeah.
I mean, right on the 360, and it got a hell of a reaction too. So with Coco, to me, this thing has to set up like this. Look to me, this looks like okay, maybe that was your third wave, and this is all just fourth wave
A little more
mess.
to go. Yeah.
Yeah. So if we get some sort of setup where we can, have a decent entry with a good stop, maybe one more push, either a false break or, some sort of failed fifth. But from here, if we get anywhere near the high, it would be a hell of a move.
Mm.
I mean, this thing theoretically could pull back all the way to here and be bullish,
Yeah.
you know?
But that upper next square up would be sort of ideal at 72, right
Yeah,
there,
right,
right in
right
there
here.
somewhere.
Yeah, yeah. So we'll see. We'll see how it plays out. There's just been nothing to do because it's just slop and chop right now. All right, here's coffee. Coffee likes 30s.
Yep.
So if we take it off of this recent low here, next July, we could make a high. We could push up into a strong high there. Again, this is not bearish, right? We had a high here and we're pushing up and we've been, chopping back and forth. If you look at the lower time frames, you just see the prices just ping-ponging back and forth in a range, and it's frustrating people. But look at where it's doing it, right at these old highs. I mean, gold has done that, silver did it, copper did it. That's a bullish formation, unless we get stuck below this half square, which is around 223, it's still bullish. So let it chop around. We look for proper setup, on the regular weeklies show that we pick up, and we'll put it up, and there'll be a trade here when it's ready to go. All right, that takes care of the softs. Now let's go look at the metals. There's gold with the circle chart.
Hmm.
Now, the thing we have to watch here with the circle is we could start riding the outside of the circle and come down, right?
Yeah, could
That's a possibility. Or we could just, drift across. The key level, 2667, right? From a circle standpoint, if we stay on top of that, it's nothing but bullish. We have time counts, all in here. So, Barry and I have been telling you about the time counts, but there's something bigger going on in gold, bigger cycle because it keeps, barely correcting when those counts come in. But I wouldn't be surprised to see some chop here for, a month or two. It would not be unusual. That's gold. Anything to add on gold?
Well, I was going to say if it can hold above that 2667, I wouldn't, especially if it can hold relatively, let's say we can hold above October lows, it's still in the same lineup, right? We could keep testing those highs.
That's correct.
Hmm.
A couple inside bars wouldn't surprise me.
Yep. No, we're good.
Okay. Here's silver. Monthly up bar, another up bar. So we have our
Mhm.
second up bar after, testing this support here on the full square. It's bullish.
Yeah.
All you can say is it's bullish, probably corrects a little bit. We could, if we even come back into this 30-29 level, it's still bullish because you're sitting on top of all this. 37.96 is the half square. Love to see us get up there, battle, and get on top of that because then we opened up to even more.
Yeah.
I think I showed this before, but 90 months from the recent low in March of 2020 takes us out to potential highs in September of 2027. Because here we did 90 months from low to high.
That 90 months, didn't that show up in the bonds? Oh, where was it? Yeah, it was bonds, right? When you're just looking.
Yeah, yeah, yep. So, and look at how beautifully this thing squared out before on 90.
Yeah. Yeah.
That's really nice. That's silver. Let's take a look at copper. Copper likes 26s. There's also 90s in here. We did 22 months in this consolidation. This you talk about. Remember, everyone was so frustrated. I remember we were talking about it on the weekly show. Oh, it's nothing to do. We're stuck.
Hmm.
But we kept saying, look, we're triangulating above all this. That's going to be bullish. And we got the bullish move.
Get a 3 month run.
Yep, squared out here, pulled back, and now we're going to be consolidating again. As long as we stay above the half square, and here that's 428, 427, 428. We can stay above that level. And I think what your level was, what, 430? So it's all in the same ballpark.
Yeah. Yep.
If we stay above that level, I mean, all you got to do is look left. You're at the highs here. You're on top of this stuff. If we chop around here and stay on top of that, it's just going to build to potentially, going for this 90 into September of 27. All in all, bullish chart. Just had a run, correcting, consolidating. Now we see what comes next. All right, let's go to the next one. Yeah, we'll do Natty next.
Hmm.
So this is the triangle we've been trying to escape, and we thought we had pushed out, and now it looks like we're going to start the month going right back into it. Low to high here was 90, and then
Hmm.
a 45 from the higher low. Here we did 45 low to low, and I said, okay, just give me a 90 off of this low. Where does it put us?
27.
Potential highs in 27. Anybody hearing a recurring theme? Like we might have a commodity bull into 27. That's what these time counts are saying. Obviously, price action has to confirm that, but we're sort of seeing it show up in a lot of these
Yeah.
charts.
It will. We might have to wait a little bit longer, but it's in the works.
Yep. And that's not natural gas. And let's end on crude. Crude's kind of interesting here. Some of the time counts, if we do a 120 from the low here where the square is set, it got us right to the high back in 2008. We take a 120 off the low here, puts us all the way out into 2030. I mean, because 12 months is a year, that's 10 years, right? 10 year
Right.
sort of
Right.
cycle.
Hmm.
Uh, the interesting thing to me is if we can't escape this circle, we could accelerate to the downside, and make a obviously, hopefully you would make a higher low than here, but that's a possibility. But we'll see. We also know that when you break out of these circles, there's violent moves. Case in point right here into that low. So that's crude.
Hmm.
And I think that's all I got.
Well, that's quite a bit.
Yeah. I
Good,
mean,
good info.
the key thing with the monthlies is it gives you that perspective of what's the bigger picture telling you? Is it an overall a bullish pattern? Is it overall a bearish pattern? And when you look at the commodities overall, you see that they've had a period of correction. All of them except for crude, I'd say. Crude's the anomaly, it's sort of its own thing, but every other one is either in some sort of base or has broken out of a base and is sort of consolidating at a higher level, waiting for the next leg. And
Mm,
and I think that's the message from the commodity complex is that, from a bigger picture standpoint, they're in the middle of bull moves.
right.
They're in a multi-year, sometimes like crude, decade-long potential move.
Hmm.
Anything else come to you, Barry, like thoughts that you have based on those big picture
Well,
monthlies that we just ran through?
all of those things are true, and I think it lines up with the sort of the longer term cycle work we've done. That going up into 27 looks like it's setting up that way, and that's the thing, it's not a linear movement. We might go sideways for another 6 months, and then all of a sudden, run for 12 months, and we're there. It doesn't.
That's right.
It's not a smooth linear process. But
No,
I just
because
noticed.
I was going to say most of the time they're very dormant. But when they move, as you said, it's a 6 to 12, 18, sometimes 24-month move. That's massive. And I mean,
Right.
just look at the cocoa chart and you'll see what can happen when they
Mhm.
go.
Yeah. And I was just looking at on the monthly, if you look at 23 low, what's that price right there
Right
on the
here.
chart? Yeah, above that. I mean, put a horizontal on the low. Yeah, right there. What is that? 64. Yeah, that's our level, right?
Hmm.
And I was just looking at how solid that looks, because if you just look at it without knowing the levels, crude looks scary, right? It looks like it could go to $25. So,
True. Very true.
and I noticed it did a similar thing in 2010 to 2014, have a kind of ascending triangle, kind of not pure ascending, but triangulating, looks like an upside breakout, and just let it all go, right?
Yeah.
It
Up
just
and then
dropped.
boom. Yep.
And here it looks like it's going to do a break to the downside, and who knows, right? It could do a quick sort of a false break and run the other
Yeah.
way and break the
Flushing,
circle and run, right?
flush
So
and go. Yeah.
yeah, so it just looked a little, it looked interesting. See where we're basing here,
Yeah.
which would be the
Yeah.
highs in 2029. I mean 2019. Those highs
Yep.
are we're sitting on top of that. So
Absolutely. So will it be interesting to play out? I mean, the key thing is you guys know the levels, you understand the time window that we've entered. It's all coming together, and now it's just watching how price acts based on those two parameters. We're in the time window. Now watch how price acts against the level, and that's where your edge will come in.
exactly.
The level will tell you whether it's going to be bullish or bearish.
And the other thing I mean, that's a good way to wrap it up, because at the beginning we talked about how, the levels we talk about, and the potential cycle expirations. All people would have to do is just make some notes while they're listening, and then use them when they're doing their own work, and maybe mark it up on the board, on the screens, and you have it. You have everything you need.
Yeah.
But you still need to obviously take the final step of putting the trade on, but at least you'll know how to frame it.
Yeah. More than any other weekend, we will say rest up, be ready come Sunday night, Monday. Things are going to be crazy, but there's going to be a lot of opportunity for the people that understand what different levels mean when price hits them. And that's the situation we think we're in.
Yeah.
We appreciate your support. Please, subscribe, like, ring the bell, share the channel with your friends because we're really trying to build it, and we really appreciate all your support. And have a great weekend, and we'll talk to you next week on the midweek.
All right. Good job, Ben. Thanks. And we'll see you guys next week. Or, well, first we'll do the midweek drop. Bye, Ben.
Take care, everybody. Bye
Bye
bye.
bye.